another day. We got NFP coming out today, so let's see how that pans out. Let's see what are we expecting at this moment. We're saying the unemployment rate would jump from 4.2 to 4.3. We're expecting non-farm employment to be at 110. So let's see what we get through. Let me go and put this into the chat. So also get the unemployment coming out today. So let's see how that turns out. That should come in pretty well as well. We're expecting 4.3 on that. So let me just put that into your chat so we know what we're expecting. We're about 9 minutes away. So we should be expecting some form of a move. Let me see if I can move this. Okay, maybe not. Yeah, about 7 to 8 minutes for that to come through. At the moment, the stocks that we're looking at, futures are up about 13 points. It's pretty flat. You're not seeing any move on the Nasdaq futures at the moment. We're going to see a lot of movement only post the numbers coming out because of the possibility that you could get a July Fed rate cut coming through. Now, whether that happens or it doesn't happen, we'll get to know pretty soon. Right, you don't want an overly bad number. You do want a number that comes near estimates, maybe 120, 130. The markets will rally because it looks like the economy is solid, inflation's lower, and you should get Powell coming and cutting in for that for sure. Right. So that looks like it's going to be happening for sure. So make sure all of you guys that are coming in now, you can see in the chat, I have put in the non-farm employment numbers that we're expecting. We're expecting 111K, and in the unemployment rate, we're expecting 4.3. So let's see how that pans out. Yeah. So at this given moment, what I'm actually looking for is to try seeing if we can get some follow through and break out into all-time highs, because then the stock market would push higher and we all can make some money. All right. Looks likely that that's going to be the scenario. Maureen Abigail says, Pertama bro, how's it going? Join in, subscribe. Make sure you stay in the chat at least till we get the numbers coming through, because that's what's going to be fun. Okay, let's go ahead. Let's see more stuff. What else is happening with you guys? We still have another 7 minutes to kill before we go in and get. Anyway, say hi, everybody. Go ahead. Let me also go in and say hi. So we get everyone coming in and saying hi, please. Make sure you guys drop in. Let me know where you guys are, what part of the world that you are in. Hello, Wage Freedom. How's it going? Nice to see you back in. Wage Freedom is the leaderboard out here for us. So we got about 7 minutes more, so go ahead, vote. I want to know what's happening. Today's question is, what will the markets do after today's job report? So uh, I actually do think if you get a number around 100 and above, the markets will rally. Anything below that, and we could take a nice little dump on the market, because that would be expecting things to get a little too crazy. So if you get too weak a number, remember that's going to signal to the Fed that the rate cuts odds would rise sharply. But the reason why it would rise sharply is because we're basically going to be getting a lot of weaker economic data. So a weaker consumer, weaker economic data. All of this is the reason. If that's the reason why the Fed is cutting, we're going to lose money, because then eventually the market will head lower. If not right now, but eventually the market will head lower. So at the moment, I would say it's better off if we do get a number around 120, 130. Bigger than that, great, we'll head higher. Looks more likely that that's going to be the case, but let's see. Right, Mora Brand says, hi, how's it going? Nice to see you guys in the chat. Uh, Sean's not joining us today, so it's just me, Jason, and Sharik should be joining in as well today. They joined in for the morning call, so let's see how that pans out. That we were discussing a lot of stuff in the morning about some of the stocks as well as the Trump Elon feud that's happening. Also, a lot of stuff that we were talking about was more related to how the markets would perform in case of a bad unemployment print. Remember, the reason why the unemployment print and the payroll data is so important is because of what the Fed chair said in his meeting in Spain, in Portugal, Sintra. What he said is he's not ruling out a July rate cut. The only thing he's doing is he's saying he's data dependent for the July rate cut. So he wants to see that there is either one, no inflation numbers that pick up because of which you see a higher, let's say, you lose the ability to cut rates if inflation is picking up because of tariffs. That's one. And two, the other scenario that you're going to face is, do we enter a scenario where consumer is slowing and hence he needs to cut? So if he does need to cut because the consumer is slowing, that's not a good sign. That's eventually going to lead to the market starting to get more weak and eventually falling. While on the other hand, if we keep inflation low, which is what's currently going on, and we have a strong job market, doesn't look likely the case, but even if we can get 100K, right, 100, 110K, we're good to go. We can get a rate cut even in July. Then the market will start discounting three rate cuts. So you want the market to discount three rate cuts? One, because consumer is strong. Two, jobs are okay, not improving, not deteriorating. And three, inflation's falling like a rock. These are the best case scenarios. Though at the moment, the market is currently priced in for best case scenarios. My bet is the market does head higher from here. You should see at least 6,500 on the S&P 500. Nothing lower than that. I actually do believe that we will head higher, not lower. It looks that way to me. I'm not sure. I'm not talking about today's print and today's data. I'm talking about a little bit more long term, something which is more in the range of the next 6 months. We could be in for a very strong rally if we start having the job market actually steadying. I'm not expecting it to improve, but I'm expecting that even if it can hold steady, we can see the job market improve substantially. If that starts happening, you can expect huge moves in the equity indexes, maybe double digit, maybe higher double digit, mid double digits as well. 15% more from here, you could be up 20%. That would take the S&P up to 7,000. It's a lot that people are not expecting, but if people stop expecting that, I start expecting it. That's the way I have actually been all throughout. So what are we getting? We're getting average hourly earnings in the next 2 minutes. 0.3% is what it's expected. It's expected to weaken. Non-farm employment change, as you can see in the chat, is going to be a negative, almost a negative 20K number from the previous reading. So when we had 139K earlier, we're expecting 111K. The unemployment rate was at 4.2. We're now expecting 4.3. So let's see how that turns out. I'm not sure if we are going to get a great number. If we do, I'm happy. It'll actually be a lot of fun if that actually happens. Anyways, less than a minute. So let me just go ahead and go to the screen where we can make sure that we have the numbers coming instantly so I can let you guys know as soon as it comes out. Mm, okay, we should be getting the numbers pretty soon. Less than a minute now to go. We're getting the unemployment claims as well coming out today itself. So the unemployment claims are expected to be at 240K, again picking up 4,000. So we might get some numbers that are not that great, some numbers that are great for us. At the end of the day, even if we can get things in line and nothing that goes wonky, like you don't get an unemployment rate that picks up from 4.2 to 4.4, I don't expect that to happen. I'm still expecting. I think the non-farm employment might surprise us to the downside. The unemployment might hold steady, because of which we'll be okay, and the market will continue rallying towards the end of the session. Anyway, there's about 30 seconds to go, so let's see how that turns out. I will be sharing it with you as soon as it does come in. Okay, do we have the numbers yet? About 15 seconds to go as well. So Let's see. Unemployment claims expected to rise by 4,000. 236 is expected to get to 240. So let's see how that number turns out. At the moment, the Nasdaq is up 22 points, so it's not really expecting anything crazy. Anyways, we're going to be getting the numbers shortly, anytime soon. As soon as I get any of them, I'll just drop it in and let you know. Uh, Nothing yet. Still looking out for what the number comes in. 147 on non-farm employment, so phenomenal number on that. Market should rally based on that. Unemployment claims lower at 233K. Let me just wait for the unemployment rate. If you get the unemployment rate coming in at 4.3 or 4.2, 4.1 on the unemployment rate, there's no reason for the market to not rally and the market to head higher. You are most likely going to be seeing the Fed cutting rates in July. This is a phenomenal number. There's no other way of putting this. Uh, we should be seeing new highs coming in today for sure. So let me just go ahead and put in these. It's pretty much what we were expecting. Good numbers is what we were expecting. So it is looking like it's good. Let me give you the the non-farm payroll out here. So 147 versus 111 that was estimated on, yeah, wage freedom says now the data is telling them that they can cut. Exactly. That's the point of all of this. I mean, and I do believe that Powell, considering that in July he did come out and say, at least towards the end of June, he came out and said that he is data dependent and he's not ruling out a July cut. He could have easily said that July is too early because it's literally 27 more days to go before you have the meeting, right? Now that you have this meeting, it's basically telling me that the consumer's strong, the job market is strong, inflation's lower. So I'm not a part of the camp where Trump is saying, like the way Trump says, bring it down to 1%. I'm not part of the camp which says, let's bring it down to 1%, but I am part of the camp that we can start cutting 25 basis points. So what I'm going to see is eventually, let me go in and see whether we have any of this trade data that's coming out. Household unemployed negative 222. So it is way better than what the market expected. The unemployment rate was expected to go higher. It inched lower. 4.2 was supposed to go to 4.3. It actually came in at 4.1. So you are seeing there is no number out here, right? April has been revised to positive 158,000. That I think is going to be the biggest kicker here. You have seen the previous, let me actually get that number. Yep. So May has been revised to 157K. So at least there's not been that much amount of a fall when it comes to these numbers. So I think the market can breathe a sigh of relief. It's pretty, I wouldn't say it was priced in because people were still expecting a horrible number. Maybe there were people expecting a sub 100 number as well. So let me just see what's happening with the market. Yeah, so the market was flatted up about 10. We're up about 70 points now on the NASDAQ, where it is looking like we should be heading higher. The volatility index has fallen again, down by 1.44%. So that's at about 16.39. The bond yield has picked up about 1.8%. So that's that. And that's more than likely because a lot of dollar money is going to start coming back in, right? Let me see what the move on the DXY is. Yep. For the first time, I've seen the dollar actually go up by about 0.59%. It's been quite a while since that's happened. Can I get water, Krishna? Water. Yeah. Yes, please. Thank you. So it looks like it's up by about 0.6%. So it has been doing pretty well. 22,715. We are just all-time new highs today, all over again. So the party continues. That's great. It's actually been good fun, and in a way, it's a good weekend because we have. Remember, we're shutting trade in about 4.5 hours from now. We shut trade at 1 p.m. and then we have tomorrow off on Friday for 4th of July, and then Saturday, Sunday off. So we'll be coming back on Monday morning. But the market is looking pretty decent. We're going to stay with you till the opening. That's the plan. I'm just going to go and read a few of these. Thank you so much. Let's see. As of now, it's still a slow to hire, slow to fire labor market. Employers added 147,000 jobs in June. Total private sector hiring was 74,000. The unemployment rate has fallen to 4.1. Let me go ahead and put that in the chat as well. So for anyone that's new coming in, they can actually come in and see this. The job growth for April and May was revised up. Okay, I'm going to put this there because everybody's been screaming, and I was actually looking at this as well. We lost 90,000 jobs in the previous month in the numbers that were coming out because we had those revisions which came down lower. For the first time, we have also now, in at least 3 months, gotten revised higher. So I'm going to put that into the chat. So pretty much you don't need to go anywhere. You just need to come to this live session and get all of the information in the chat. Anyways, it's pretty much defied all expectations, right? 147,000 jobs added last month, unemployment rate declining, average hourly earnings picking up. What else do you want? You just have to tune into this live and make some money with us. That's all about it. So do me a favor and go and subscribe. Make sure you like this, and as well as that, go ahead and put the vote, right? So now I'm going to end the poll because obviously we've lost the market, but most of the guys have voted for us. In this poll actually says what will the markets do after today's job report. They say it's going to rally to new highs. Let me actually keep this because I want to see how many of us actually start believing whether the new highs sustain or whether we head lower. What's going to happen about that is going to be worthwhile to know because you could actually see the market head lower a bit as well. I don't see that happening, but it could be the case. So let's see. All right. You are actually seeing ADP coming lower. Remember, ADP yesterday, the private payroll data was a negative 33,000. Whereas today, on the other hand, we've been up 147,000. So the ADP down, BLS data up, which is non-farm up, ADP down, has been playing out pretty well. So that seems to be the case any which ways at the moment. Anyways, we're up about 22,717, up 77 points. Let me see if there's any stock that's going crazy. A firm is up about 1.61, 69.47. Let's see if it does break out of 69.81. It could maybe head into the 70 as well. So that's actually a buy now pay later company. And yesterday, last evening, the CEO Max Levchin came out on CNBC and was saying that the consumer is very strong. So, and that made me feel somewhere that this doomsday approach that everyone has right now has not really come through. And I think the tariff hit was so sudden that nobody reacted. And by the time anybody could react to any of that was happening, he already went in and caved and said, okay, you know what, let's give that 90 days and get it over and done. So it was a slap, but by the time you could even feel anything that went, you already recovered because he already said that, okay, sorry, I forgot my mistake. I should not have slapped you. That's what happened. Anyways, so at the moment, data looks great. We most likely will be getting 3 cuts this year. Let me see if traders have gone in to adjust for that. That'll actually be worth it. Rate futures now price about an 80% chance of Fed rate cut by September, down from 98% before jobs report because of the size in which it's basically come in. Yeah, rate future traders exit bets on July Fed rate cut after jobs report. So now this is different to what I'm saying. A lot of people are not expecting him to be cutting in July. I have a feeling that if he doesn't cut, he will be super bullish because there's nothing left to try saying, okay, now there's going to be inflation coming in, there's something coming in, the job market is slowing. None of that shit's happening, right? Most likely in my scenario, he's going to cut, right? That's against most people saying because if you have better data, most people are like, what's the need to cut, right? Okay, let's get this going a bit. Mm. So initial jobless claims came in also. I don't think I put that up for you guys. So let me actually do that. So you guys have that as well in your chat. All you have to do is come here and watch this. All right. The actual was 233K. We were expecting jobless claims to increase, right? So the data to get worse. The job market's looking very, very strong. At least this data, phenomenally strong. Yeah. I mean, I do remember some amount of rumors that were going around about a negative print. So some people were also expecting a negative print, especially because you saw ADP numbers come in negative. But I was always of the concept that we might be near the 100 number. I was not expecting a 147 for sure. There was no way I was expecting 147. That was not on my cards, not this time. And I wasn't even expecting the unemployment rate to drop from 4.2 to 4.1. I was actually expecting it either to stay at 4.2 or tick up higher to 4.3. But this just tells me that the job market is really strong. So I don't see a reason why stocks should be weakening. My bet would also be on the fact that we will rally to new highs. And we've already done that, but I think we can head higher. Maybe 23,000 on the cards as well. Right, let me go see if there is some more great information to help you guys. Apple's iPhone sales in China increased by 8% in Q2. First time Apple has increased iPhone sales in China in a quarter in 2 years. So let's go see what's happening with Apple. Apple is down 0.39%, though it's actually rallied from all the way to 197 3 days back to 212. So it's actually been picking up pretty well. So Apple's been doing decently well at this moment. I would be more interested today in seeing whether we can actually see the dollar actually starting to pick up. That's been something that's been actually pretty weak. Mm, I'm just going to go see if there is anything more that's currently going on. Trump says Fed's Powell should resign immediately. There's going to be more amount of people that are going to start believing exactly what Trump's saying is because the data is supporting what Trump has been saying and it's going against what Powell has been saying. So Powell's saying that we're going to see inflation, data is going to come out worse, and that's why I'm holding on. Trump's been saying it's not yet come out worse, why are you not cutting, right? There's going to be more people that are going to shift to the Trump camp versus when you see the Trump versus Powell scenario, you're going to see a lot more people shifting into the Trump camp. And I'm actually going to start I'm not necessarily shifting into that camp yet, but if we don't start having a dovish Fed in July, I would start shifting into that camp because you do need some amount of rate cuts coming through. That's bare minimum that I would expect. It really doesn't make that much of a difference in order to cut 25 basis points, so might as well cut it because there's no point in being this tight. Now let me see how cryptos have reacted actually. You can see some form of selling. Bitcoin did hit 110,000 and now it's at about 108. So it has weakened. It has weakened by 1%, so that's okay. That's part of the game. It's nothing too fancy. Let's actually see what happens with the Nasdaq over the day. Yeah, we're still at 22,702, so that's going to be there. I think towards 9:30, once the market starts getting closer to open, we should be heading towards 22,750 and higher. I think we will break out into all-time highs during market hours, not just in pre-market hours. Let me see some of the stocks that's going on at this moment. ASML's down about 2%. That's okay. Cadence Design Systems up about 4.71. What the hell happened here? The US lifted export restrictions on chip design software. Okay, so it's not an NVIDIA itself, but it helps, right? Lululemon's up about 0.5%. Remember, we've been talking about the US Vietnam trade deal that actually went through. and the benefit that it has for Nike and for Lululemon. Nike, obviously, for way more than Lululemon, because 50% of their apparel and 30% of their footwear is currently made in Vietnam. So the fact that you have clarity on the trade rates and the tariff rates is pretty good. Like, because you can sort yourself out knowing that as a company like Nike, you know exactly what your rates are going to be. You know exactly that, okay, I need to pay 20% on my imports when I'm importing a shoe, an Air Jordan or an Air Max coming from Vietnam. And how do I deal with it? They have more time now because the deal after the UK and China, the first one that came out is Vietnam. So I'm guessing you're going to see a lot of bullish momentum coming into Nike, into Lululemon, but mostly into Nike. And that's why if you see yesterday it was up about 4%, Nike was up about 4, whereas Lululemon and all the others were still flat. On was up about 2, but they're more high beta, right? I mean, Nike shouldn't be up most when the whole sector is up. But that's what I'm trying to tell you, that maybe this year is the year of Nike as well. The year of Nike, the year of Reddit. Quite possibly. I think Reddit was also up yesterday, or was it down yesterday? Reddit was up about 4.67%. So Reddit's hit about $160, 44% away from its all-time high. It could very well head there in the next few months. You know, it's such a high beta stock, you could be seeing it go all the way to 270, 280 as well. It wouldn't be too much to actually see that coming through. Let me go see if we have anything else. The consumer is strong. Let me just get to that. You are seeing some form of selling off in the market, but I guess that's just to do with the amount of trades that would have been placed. Also, do remember you will see some form of position closures. Position closing will take place because you have a long weekend. People don't want to risk more money into this. So they would wait it out. They rather wait and see what's exactly going to be happening rather than having to worry so much about the whole weekend. You know, we've been having wars over weekends, tariffs over weekends. We've been having crazy shit over weekends, right? So it's understandable why some people don't want to be holding their positions into the weekend. You did get the USD JPY rally. Like, I have not seen this kind of a move on the USD JPY in quite a while. But we rallied all the way from 143 to 145 on USD JPY. That's the power of the dollar buying that's currently happening. The euro sold off as well. Maybe this could very well be a scenario where a lot of the currencies globally start now weakening against the dollar and the dollar starts strengthening. It's quite possible that this is something that actually begins happening. And if that is something that actually takes place, we might, I'm not saying it would be beneficial, but see, for Q2 earnings that are going to be coming out, it could be beneficial for a lot of these companies because a lot of them make money by selling products outside America. So there would be a lot more tailwinds, FX tailwinds rather than FX headwinds that would be there. So I actually see that as a bullish sign. I don't, even if the dollar index goes back to 100, right, it'll just be reversing a bit. It is so further away from its high. Like, I'm not even looking at an all-time high. Let's look at 23rd June. You were looking at $100 dollar index, which is still after a jump of about 0.6% today at 97. So it's not even really catching back. Seeing it at 100 is nothing because let me tell you, right, exactly when Trump came into power, you were looking at 106 on the dollar index. Post him coming to power, you saw the dollar heading all the way to 110. 110 today trades at 97, right? 110 down to 97. So even if 97 goes back to 100, it's not too much. And I actually do think that it's quite possible that that does happen. Let me actually see what's happening with the pound. The pound also sold out. The pound has its own issues. The gilts, which are basically the bond yields in Britain, they've been going through some issues because there has been some speculation about the chancellor not getting along with the prime minister and something else, and then eventually now, like, they knew that the bond market would screw them, right? So the thing that happened with tariffs for Trump is pretty much similar to exactly what's happening right now with Starmer and Reeves, right? The guys in the UK. It's the same story that's currently playing out there as well. Anyways, let me get back to our markets and see what's happening. 44 points up on the Nasdaq. The volatility index down about 1.2%. The 2-year yield actually is up 2.35%. and the 10-year yield is up about 1.33%. So you are seeing Wage Freedom says, wait, do I have it wrong about if labor numbers show the economy is stronger, then there's less need to cut and the dollar can rise because there's less anticipation of cutting. So, as a concept, what you're saying is absolutely right. But we are in differentiated markets at this moment. The concept currently being that because the data is so good, you don't necessarily need to be so tight. In terms of you're currently at 4.5 on the index, 4.5 on the Fed funds rate. There's no reason to be so tight because you are seeing the housing market pretty much come to a slowdown. So that's not making sense at all. So what you can do rather is if your data supports you, which is the only reason the interest rates went up was because the Fed wanted to fight inflation. So now that inflation's come under their 2% target or around their 2% target, there's no reason to keep it there at that higher rate, right? The only reason they've kept it there is because it's in order to fight inflation that can come from tariffs. Now, as the job market slows down or the economy slows down, you will see some amount of cutting that comes into the Fed. That's the expectation that if the job market slows down, you should be cutting, right? The same story that you've been saying. But today, the problem that's happening is inflation is lower. So that's no reason to stay higher. If the job market is not weakening, why don't you cut and why don't you open up the housing sector? Because the housing sector is literally collapsed. So that's what's currently been going on. And what I do expect is that so I'm not part of the camp saying that you're going to see a 4.5% rate on the Fed funds future come down to a 2% rate. What I'm saying is that you could have a 4.5% Fed funds rate come down to a 3.5. That 1% drop will make a refinancing boom, a housing market resurgence because the construction spending is literally flat, completely flat. There is no real estate buying that's currently happening. There is no purchasing that's currently happening of any construction related stuff. So that's what's hurting the market. Now, that can actually help the economy if these guys reduce rates. And if there is no inflation, it doesn't make sense to keep interest rates at 4.5. So if you have inflation at 2 and a real nominal rate of 1% growth, you can then look at a 3% interest rate, a Fed funds rate. So if you have a 3% Fed fund rate versus the current rate at 4.25, 4.5, you still have a percent and a half that you can adjust lower. So that's the reason why I expect them to begin the process of cutting pretty soon, even though the market is currently not expecting that. Because just like you're saying, wage freedom, traders currently are betting that if the data is better, we don't need the cut, right? We might as well use it as firepower on a day when the market actually needs it. The only fight back that I have with that concept and with traders out there is that if you wait for things to get worse, it's already going to be too late. Which is why I believe that it makes sense in order to, let's say, begin cutting by 25 basis points, maybe every meeting, every other meeting. Even if you do that every meeting, you will only get to a 3.75 or 3.5 by the end of the year. And you can see at that point of time, if there is tariff inflation, stop cutting. You don't need to hike, but you can stop cutting. So don't cut 50, cut 25. Yeah, that's true. It's all sort of conflicting data. It is true to some extent exactly what you're saying. The market currently is in a scenario where good news is not necessarily good news, and bad news currently is good news because the worse the news gets, the more Fed cuts that are going to get expected. So that's how the market's currently thinking. But I've always been of this concept that it's a wrong way of thinking. If you are expecting that the consumer slows down and hence I must cut interest rates, that is that is you putting a band-aid post getting injured. The concept is to stop yourself from falling, and the only way you stop yourself from falling is to reduce the speed at which you're running, right? So how do you do that? You basically reduce the interest rates, because reducing interest rates would help the economy sustain longer. That's the whole game that I have in my mind. A lot of people don't agree with me on that, but That's how I've been thinking about it. So I actually expect him to, if not cut, at least speak dovish from an aspect where he starts believing that the markets can, he, there's no reason for him to come out anymore and say that he needs to be this restrictive on interest rates. If inflation is not picking up, if inflation is dropping, the unemployment rate is dropping, job market is better, average hourly earnings is better, and companies coming out with their results are better. So no reason for him to not at least be dovish in his statement. So he could actually telegraph a Jackson Hole or a September cut in July, and he can be super dovish, and that will actually help the market completely head up, because then you will have three cuts coming in for 2025, and he's telegraphed that pretty well, because they don't want to even, let's say, I don't think he is going to be by any chance affected by what Trump says, including the handwritten notes and all of that, and all the penmanship that's been going on there. But I think at some stage he will start realizing that a lot of people will not be on his side, even on the Fed table, not otherwise, but on the Fed table, purely because of the fact that we have already seen two people from the Fed come out and say that they support a July rate cut, both being Republicans, obviously. But I do believe that you will start seeing some more people coming in and saying, hey, you know what, maybe we should look into a rate cut. And if that happens, you don't want dissenting members on the FOMC table against Powell at all points of time. That just doesn't make sense in his last, what does he have? He has about 10 months pending for his, I think he retires somewhere around May. So they're going to be putting someone through in October or November, and in January they'll swear that person in for. They were thinking of making a shadow Fed chair, but none of that is really picking up. Anyways, this is kind of a rare sight to see. The unemployment rate ticked up by almost a full point between 2023 and 2024, and has then steadied out. For the last year, it has been between 4 and 4.2%. If you don't round out the numbers, the unemployment rate declined to 4.12% in June from 4.24%, right? That's a huge thing. Let me actually put that in the chat so you guys know the numbers that I'm speaking about. So that's how the numbers came in. It wasn't very close in rounding, but it was way low, 4.24 to 4.12 in a month. That's actually pretty bullish. So I actually feel we should see a stronger market reaction today that comes in. We might get some selling that comes through towards the end of the day or in midday just because of profit booking for the weekend, right? No one wants a Middle Eastern war to start all over again or any of that to happen. So traders have now scrapped bets on a July Fed rate cut, and the September cut is no longer fully priced in. Odds show about a 50% chance of a cut by September, down from 60%. So most people are not expecting cuts. I'm on the other side of the bargain saying I think he will cut more than what people expect, just because the data is more appreciative of the fact that even though the economy is better, there are small cracks that are visible, especially in housing and especially in jobless claims as well. It's not picked up yet. I still do agree with that. I'm part of the camp which is also saying that, okay, 230, 236K is a good number, right? You don't need to worry about that. But like I'm saying, you don't want it to get, you don't want to wait for it to get worse. That's all I'm saying. Because we get about ISM services PMI coming out at 10 p.m. We're expecting America has been in a contraction on their services PMI. So it was 49.9 earlier. We're expecting 50.8, which means we're expecting the economy to expand, or at least the services PMI to expand. So let's see how that comes in. And we're going to be expecting factory orders coming in as well. It was negative 3.7. We're going to be expecting a positive 8.1. So if we get those numbers coming in, possibly it looks better. But in all seriousness, this number was a good number. We couldn't have asked for better numbers. Okay, let me get over some news here. So it is a solid headline. What I'm looking at is under the surface, there are some cyclical areas, and which is what I'm saying, wage freedom, that I am supportive of a rate cut purely because of this reason. This is what I was waiting for to see this. You are seeing some cyclical areas showing job losses. Look at manufacturing, look at mining, and look at residential construction. These three of them have actually fallen pretty badly in jobs. Residential construction payrolls have declined slightly. I don't think it's going to move the Fed this much, but these are some things that are showing where, at least in the real estate, housing, and construction area, everything's at a standstill. That's where it's coming to. Uh, let's look at gold. Let's see what happened there. It should have fallen nicely. Yeah, down about a percent. So gold's down about a percent. Silver sold off from its day's high as well. So gold is down 1%, about $35 lower at 33.22. Mm, the dollar index is still holding steady at about half a percent higher. So we still have about exactly 30 minutes to go for the market to open. So there is a company that I have on my radar. It's called Rocket Companies, RKT. It's basically a company that is into refinancing mortgages, right? So if we do actually see over the next few years rates heading lower and the 10-year bond yield heading lower, even if the rates don't go lower, but the 10-year bond yield starts heading lower, you will eventually start seeing a lot more people refinancing. And these guys, being the largest beneficiaries of people refinancing, would basically end up having their stock heading higher. The stock used to trade at 42, it trades at 14. So that's saying something. Okay, let me see what else is currently going on. June jobs report showed the US labor market remained more resilient than anticipated in the final month of second quarter. 147. So that's what the thing is, that people are expecting that, just because now you're going to be seeing a lot of traders are expecting this, that if you've seen the jobs come in over 145,000, about 35,000 higher than what they expected, and you had revisions higher by about 15,000 for the previous month, the Fed will likely stay hold in July, right? It would suggest that the economy still has momentum and that the Fed can afford to wait until September or later, depending on when things get worse. So, in essence, that is the concept of being data dependent. But I actually do believe that he is going to start giving into some amount of political pressure at some stage as well, because it just builds a larger base against him if more people start believing that cuts is what should be happening, right? So Powell has said that rate cuts depend on a clear trend of cooling. NFP is one key piece of that trend, but it's not standalone. A strong NFP does not rule out a later cut, but it would delay it for sure, right? So it doesn't look like he would get affected by political pressures, but it could always play a subtle role. You never know, right? Sean says, brilliant. I mean, some positive news. Yeah, the news is positive. I'm not sure if the market would react completely positively, though I would expect it to head towards new highs and go higher, because I think the clarity with the market is that if you have better economic data, the economy is stronger, and hence it makes sense for markets to go higher. Now, Fed rate cuts are not going to be the reason for stocks to head high. I've always been of that concept. The economy strengthening, earnings are going to always be reasons for the stocks to go high. Not am I going to be getting more amount of cuts or less amount of cuts now that really makes any that big of a difference. The only time Fed rate cuts make a huge difference is if inflation is of consequence. Today, inflation is of no consequence. Look, go back in time. Look at 2021. Look at post-COVID. You had inflation spiking like crazy. When you had that move happening on inflation like crazy, you saw the Fed coming out and hiking rates. Went all the way from zero to about five because inflation went all the way from zero to 9% post-COVID. Right? How do you fight that? You hike it. You hike rates. Now, in those kind of scenarios, whether the Fed hikes or whether the Fed cuts, most likely while it was hiking, the markets do take a lot more of an effect. But on the reverse side, when the markets go higher because of good economic data, that is usually a better scenario for a bull market. It is just a simple concept of the more strength that's there in the market and the stronger the economy looks and comes out with hard data and soft data, eventually the markets head more and more high. So I, with this data, would expect us to at least have another 10% rally in this 6 month period ending December 31st. At least. So we would close somewhere around a 15 to 20% YTD for the year. I don't think anybody's expecting that. The most bullish target out there is 6,600. I would think maybe that number would get broken and we should head towards the 7,000 also in an exceedingly bullish case. Again, remember 2026 midterms come in November, usually the most powerful quarter, midterm quarter, and the 2 quarters after that. So I keep repeating these things over lives is just because I wanted to become muscle memory for you guys. So when it actually does happen, then you guys realize that we've been speaking about this, and then the next time you can actually go in and buy and make money for yourselves as well. Okay, let's see what else is the world saying about all of this. Hmm. Yeah, Interactive Brokers chief strategist Steve Sosnick says firing Powell would be a seismic shock. I mean, he has the power of doing it, so I'm not sure if he does it. I think he's just going to wait it out. The share of 25 to 50-year-olds with jobs ticked up in June to 80.7% and is where it was 12 months earlier. That's fascinating. That wouldn't be something that I would have expected. I would have actually expected some amount of job fall in that region. One thing that I'm seeing is a lot of people who are coming out of colleges right now. It's not very easy to get jobs. It is actually pretty tough to end up getting a job. It's not coming in very easily. So the market yesterday was pricing in a 25% chance that Powell and the Fed would cut rates later this month in July. Now poly market is pricing in just a 6% chance. So possibly the only cut that the market's currently expecting is in September. Well, let's see. Anyways, let me see what's happening with some of the stocks. Mm, most of the momentum ones are just flat. So they're not, they were up about a percent when the news came out, and then they've just been flat at around 0.3, 0.4, zero point 0.5. So you still have the dollar index up about 0.5%. I would actually be interested to see where the dollar index closes today. If it can close at the 0.5% rate or higher, that would actually be pretty interesting for me to actually see. Hmm. Cadence Design Systems up about 5%. That's because of their design chip controls that the administration's taken off so they can sell it to China. Let me see what's happening with Nvidia. That should be up, yeah, up about 0.7%. It is most likely 50 cents away from hitting an all-time new high. So that's that. Palantir up about 1.78%. Palantir has actually fallen from its 148 level to 134. And now we've been playing in that range, so should also start heading higher. Keep a watch on a company called Trade Desk. If we can take out the $80 level, I actually believe we'll be heading towards the 100, in the next 9 to 12 months if that number is taken out. Right? We also do have some form of eventual resistance that will come in at about 92, 93, but I actually do think that you can see these moves pushing higher. Uber is up about 0.27, so nothing crazy there. Tesla was up about 5% yesterday on their numbers that came out. The Q2 deliveries were about 384,000. So the stock was up about 5% yesterday, up about 0.73% today. So that's that. Let me go ahead. Let me see if we have some more. It's actually a very interesting report. So I'm actually going to spend some time looking into this report because if we can find out that this is not going to be a one off scenario, it'll actually be exceedingly beneficial to know that the economy is actually strengthening instead of underlying weakness still being present, right? Remember, you don't want just one sector seeing 100,000 jobs that got created or 70,000 jobs that created, and that's the reason why you're now at 144 or 147. That doesn't make sense, right? European Commission President Ursula von der Leyen says, aiming at an agreement in principle with the US on tariffs, we are ready for a deal. So looks like the EU deal is also going to be going through before July 9th. You should be getting India's trade deal going through in the next 48 hours as well. So that's going to be happening. You got Vietnam that happened. You have now left only Japan. Let's see, maybe we might actually get 45,000 on the Dow today. Maybe. And if we actually do break the 45,000, I mean, I'm not sure if we'll actually get it today, but maybe closer to that. If we can actually get there, that'd be fabulous. That would be a new high. 45,073 was the high for the Dow. Let's see if we can get that. That would be a huge move just for today. I actually don't expect that to be happening, but I have stopped not expecting things in this administration. 1.48% is what that would require. At the moment, the NASDAQ is just up about 0.33%. So, not really a huge move. 22,715 is where we're currently trading at. Nike's down about 0.76. Again, it was up about 4% yesterday because of the US China trade deal that went through, the US Vietnam trade deal that went through, sorry. Do we have any large movers on the S&P 500? No. But what we do know is that there is a company called Datadog that is currently going to be added into the S&P 500, and hence the stock is up 10%. That's about 9.82%. So $148.27 on that. That makes it about a $50 billion business. Trades at a price to earnings of 286. Jesus Christ. Let me actually see these numbers that they have there. They do about 2.68 billion in sales, and they've just become profitable at 183 million. So that's fascinating. They got chosen to join the S&P 500. You usually want a company in the S&P 500 when they get added to be a company that has got added in because they've had some form of, at least some form of profitability structure that's been there. The fact that these guys have been profitable for 2 quarters, might as well just put some other companies as well, right? Why not? And also for everyone that's wondering, I actually do believe that the XLK, which is the technology, or the triple Qs, right, which is the Nasdaq, would be the best performing index for this quarter. That's my bet for this quarter. I mean, not just this quarter, maybe even for the second half of this year. You should see the Nasdaq heading to pretty much higher highs, at least a 10 to 15% move. And I would believe that technology as a sector would outperform most of the other sectors by a large margin. If I really had to choose one, I would choose the triple Q, which is just the Nasdaq 100. Perfect. Let me just go ahead and see if we have some more. We have some more information which it comes related to the data. Okay, we're going to be getting final services PMI at about 10 a.m. Eastern. Not really that important, but we don't want the number to be that weak. We would still want a 50 plus number. We're expecting 50.8. It's currently trading at about 49.9. So that was the previous number. The forecast is about 50.8. So let's see how that turns out. Anyways, looks like pretty smooth sailing for now. 22708. Uh, Nothing too fancy. Scott Besson did come on Yahoo Finance and he was talking. Funny. Treasury Secretary Scott Besson questioned Federal Reserve policymakers' judgment on interest rates, reiterating his view that 2 year Treasury yields are a signal that their benchmark rate is too high. He says the committee seems to be a little off here in their judgment. Besant has said in an interview with Fox Business News on Thursday. He says the committee seems to be a little bit off here in the judgment. The Treasury chief has repeatedly said he would only comment on past Fed policy, not prospective decisions. Anyways, but he has been commenting, so that's that. Currently, the range at which the Fed has set its interest rate policy is between 4.25 and 4.5, while the 2 year Treasury is currently trading at 3.7. So that's a difference of about 0.5 to 0.75%, which is about 3 rate cuts of 0.25 each, which is what Besant is saying is that there is room for it to head lower. Besant also says that there's a lot of good, strong candidates to replace Powell when his term as Fed chair is up in May 2026. When asked about his own potential candidacy, he said, I'm not going to reveal private conversations. So that's that. But I don't really think he's going to end up becoming a Fed chair. They most likely might get Kevin Hassett or Christopher Waller to become the next Fed chair. Kevin Walsh is also there. But I don't think no Treasury Secretary is going to leave the Treasury Secretary job in order to become a Fed chair, right? That's like going from the back of the seat to becoming the driver. Really, no one wants to do that. So I don't really think that's going to happen. Besant also signaled he hopes that Powell leaves the Fed altogether next May. Technically, Powell would be able to stay on the Fed board until 2028. If he did that, then only Kugler's position would be open in 2026. So he says that we get to hopefully fill 2 seats next year. Basically, they just hate Trump and they don't want. I mean, they basically hate Powell. They don't want Powell. They don't want him sitting on the Fed when he leaves. Remember, even though he leaves next year, he still has another 2 years after that to remain on the Fed, not as the chair, but as a part of the board, because they select the chair, but he can continue remaining as a governor then. But I don't really think even Powell wants to stay because of all the amount of shit show that's been going on there. And he can just go back to Carlisle or something and just do whatever he wants to do and enjoy himself. He's done enough already, and he's been listening to a lot of shit, especially getting handwritten notes. That's new. Anyways, 22,711. We got about 10 minutes for the market to open. So I'm not really going to waste a lot of you guys' time and just keep waiting while the market opens. Uh, Most likely we'll do a post market live if something goes in the market, but otherwise enjoy your day, enjoy your fourth, and I will see you if not post market on Monday before the market opens from a different country at a different place. That should be fun. We will take it from there then, guys. Enjoy yourself. We already hit an hour mark, so I don't want to keep everyone just here. Have a good day. Enjoy yourselves. And that was a good report that we got. Take care. Appreciate everybody joining in. Sean, Wage Freedom, everyone. Have a good night, guys. Take care. See ya. Bye bye.